The US earnings season is well and truly underway. Some of the world's biggest companies reporting next week. Equity markets on both sides of the Atlantic are poised. I'm Jamie McGeever and this is Market Pulse. Well, let's get straight out now to Barclays analyst Will Hobbs. Will, next week we've got Google, Citi, Goldman, Microsoft, GE, just some of the names reporting next week. Which of those big companies should we expect to lead market direction next week?
$1 million question. Yeah, Jamie, it's an interesting week next week for earnings, certainly, because we're going to get a good read across a number of sectors, I guess. Just taking sort of like, if we go down the list, Google have had an unbelievably strong run since July. I think they've outperformed the sector by 20% plus, and the market obviously over that time period. So I think that expectations are already pretty lofty going into the results. I wouldn't necessarily chase them. Having said that, we do still like Google. We own it, and probably will continue to own it in the long run. It doesn't look necessarily massively expensive given the sort of the growth that we still expect coming out going forward. So you think
Google will lead the tech sector, into a pretty decent performance in Q4?
Yeah, I would have thought so. I mean, I don't want to sort of say what the shares are going to do on the day, but we don't see any sort of reason to sort of sell out of Google just yet. We think there's probably still more upside in the shares on a medium term.
And of course, as I mentioned, then we've got Microsoft as well. Still a big company.
Yes, still a big company. I mean, we had PC shipment data on Q3 out the other day, and that was pretty soft, I have to say. So, I mean, there may be a bit of disappointment there, but you probably can expect investors to sort of have a little bit of patience with Microsoft, because we are expecting the Windows 8 launch coming up, and investors are going to want to see what happens there before taking a sort of more decisive action on the stock. And also, for very long-term investors, this is still, a company with a huge captive audience and still generating massive cash flow.
What about the banks? Some of the big ones on Wall Street reporting next week. What will we learn about the US financial sector, and should investors be buying into it?
Yeah, well, we like US banks, actually. We've had an investment idea regarding the sector for some time, and you'll probably find, I mean, there'll be a mix of results. Obviously, you'll probably find that capital markets will have improved over the quarter. We've seen that. We've seen evidence of that. So you would have thought that some of the banks with capital market exposure might be able to report a bit more positively on that area of their business. Loan growth is still positive, though it might still be a little slower than it was last quarter. And you would have thought there's going to be some further net interest margin compression. But overall, the banks look cheap to us, and interestingly, a cheap way to play the housing market recovery.
The banks look cheap, but I suppose they're cheap for a reason. I mean, some of the big ones, like Citi, for example, have underperformed this year. I mean, that's for a reason, right?
Absolutely. There's a big range of risks that you take when you invest in the US bank sector, and particularly the likes of sort of Citi and not JP Morgan. Well, they did prove that the other day. But Citi and Bank of America, where you've got sort of, obviously legal risks alongside the regulatory risk that you take with investing in US banks generally, or banks generally. But that's why we sort of advocate a sort of broad, diversified mix of regional banks, US and US diversified banks. So within the ones that we like, for instance, JP Morgan, Wells Fargo, US Bancorp, and maybe Citigroup if you want to take a bit more risk.
Okay, that's the US. Earnings season picks up in Europe next week as well, although perhaps not as big blue chip names. But can we expect European earnings to lead European markets again in Q4 on an upswing or not?
Well, it's interesting because actually, earnings expectations, and just quickly sort of darting back to the US to sort of cover Europe, the last 3 months have seen the most aggressive downgrades in terms of Q3 expectations in the US and in Europe. And that has been the period when US and European markets have rallied the hardest. So I'm not sure that markets are really focusing on what's going to happen for this Q3 earnings season for either, really. I mean, maybe they're looking a bit beyond that. And actually, you're just seeing that, rising risk appetite generally, which is being prompted by, the ECB's latest actions and maybe some better data out of the US, is making investors a little bit more comfortable about investing in markets which to us still look quite cheap. And in Europe, you're probably not expecting the greatest earnings season. Economically, we know that the European region still remains in a very tough situation, and also obviously our exposure to Asia might have hit our European companies a little bit harder than some of the US corporates.
Okay, Will, thank you very much. That was Barclays' Will Hobbs. That's all today, but do join us at this time every day, that's 1200 BST, for a look at what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.